Hey everyone, welcome back to Corporate Decoder, the place where we not only read the fine print but also translate the corporate jargon into plain English. And today we have a special treat, a report that really shook things up at Civeo Corporation. Get ready to uncover how a new partnership is reshaping the board and the strategy of this big company. Before we dive in, if you love getting the real story behind company filings without all the fluff, make sure you are subscribed. We also have a fantastic Discord community where we break down more of these important reports. The link is in the description below. Alright, let's talk about Civeo Corporation, a company that provides essential workforce accommodation solutions. Think of them as the people who build and manage the camps and facilities for workers in remote locations like oil fields or mining sites. And on the 25th of November 2015, a big announcement came out that signaled a shift in how this company is run from the very top. The main event here is a cooperation agreement, basically a handshake deal between Civeo Corporation and a group called Engine Capital LP and its partners. Now, this isn't just any ordinary business deal. It directly impacts who sits at the head of the table. So, what did this agreement do? It means Civeo is adding not one, but two new directors to its board. We've got Jeffrey B. Schofield joining as a Class I director, and Daniel B. Silvers coming on board as a Class III director. Think of these as different categories of board members with staggered terms. Mr. Schofield's term will run until the 2027 shareholder meeting, and Mr. Silver's term goes until the 2026 shareholder meeting. CEO has also agreed to put Mr. Silvers up for re-election at that 2026 meeting, with a term that would then extend to 2027. This shows Engine Capital is looking for influence and stability with their chosen representatives. But it gets even more interesting. These aren't just figurehead positions. Mr. Schofield is being placed on the Audit Committee and the Finance and Investment Committee. This means he'll have a direct say in how the company audits its finances and makes major investment decisions. On the other hand, Mr. Silvers is going to be involved with the Compensation Committee, which decides how executives are paid, and the Environmental, Social and Governance, or ESG, and Nominating Committee, which plays a big role in board composition and company ethics. These are powerful committees. And Engine Capital clearly wants a hand in shaping Civeo's financial oversight, executive pay, and its commitment to responsible business practices. Now, this agreement also comes with certain rules and commitments. There are what they call standstill restrictions, which means Engine Capital can't just go out and try to take over the company in certain ways. They've also made voting commitments, so they've agreed how they will vote their shares on certain matters. There are also provisions for reimbursing expenses and a mutual agreement not to say bad things about each other. These restrictions and commitments are in place until a specific date, which is tied to future shareholder meetings. Essentially, it's a cooling off period and a commitment to cooperation outlined in black and white, lasting until at least the 2027 shareholder meeting. So, to recap, this cooperation agreement led to the direct appointment of these two gentlemen to the board. What is really telling is that, in order to accommodate these new directors, CEO had to expand its board of directors. It went from 9 members to 11 members. This tells us that the existing board leadership likely saw this as a necessary step to meet the demands of Engine Capital, rather than a simple rotation. And of course, with new roles come new compensation. Both Mr. Schofield and Mr. Silvers will be earning salaries for their board service. They'll get an annual retainer of $75,000 each. On top of that, starting with the next shareholder meeting, they will also receive annual restricted share awards, which are essentially company stocks, valued at $125,000. This means their pay is directly tied to the company's stock performance, aligning their interests with shareholders. Adding to that, they are not just starting with future awards. Upon their appointment, the board also decided to give them restricted share awards valued at $125,000 each, based on the stock price on the 26th of November. So immediately upon joining, they are receiving a substantial equity stake in the company, further reinforcing the idea that they are there to lead and represent significant shareholder interests. To make sure everyone knew about these big changes, Civeo issued a press release on the 26th of November. This announcement officially communicated to the public and the market that these two new directors were coming on board, and that the cooperation agreement had been finalized. This is standard practice for such material changes to ensure transparency. Now, the full text of this cooperation agreement is included as an exhibit with this filing. We've linked it in the description if you are feeling particularly adventurous and want to read every single clause yourself. And finally, the report is signed off by E. Colin Jerry, who holds a pretty important role as Senior Vice President, Chief Financial Officer, and Treasurer. This means the financial leadership of the company is aware and approving of these changes. So, what is the big picture here? Civeo Corporation has entered into a pact that brings new voices and significant influence to its highest decision-making body, the Board of Directors. This move, orchestrated by Engine Capital, suggests a desire for more active oversight and potentially a new direction for the company. The appointment of directors to key committees like audit, finance, compensation, and ESG indicates a focus on financial health, executive accountability, and the company's broader societal impact. The increase in board size and the equity awards for the new directors underline the significance of this agreement. Looking at this more broadly, this type of agreement often arises when a major shareholder, like Engine Capital, feels the company's current strategy or leadership needs a shake-up. They are essentially negotiating for seats at the table to ensure their vision for the company is implemented. The fact that Civeo agreed to this expansion and committee appointments suggests they recognized the strength of Engine Capital's position and likely decided to cooperate rather than engage in a potentially more costly and public battle. The key players here, Mr. Schofield and Mr. Silvers, have been placed in roles that give them considerable power to influence Civeo's future operations and financial reporting. It will be crucial to watch how their influence shapes the company's strategies and its financial performance in the coming quarters. This is a clear case of shareholder activism leading to direct boardroom changes, and it will be fascinating to see what unfolds for Civeo Corporation under this new dynamic. Alright, that is our breakdown of Civeo Corporation's latest filing. What is your take on these board changes and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description for more exclusive content and discussions. Thanks for watching. See you next time.